Hello guys, in today's video we are going to analyze together gold, and we are going to start from taking the IBDA data range. As you can see, I already separated the last 60 trading days, that is from Friday November 2023 to October 2023, and then the last 40 days from December Friday 2023, and then the last 20 days from Friday December 2023. So this is IBDA data range. What you do first uh, during your technical analysis, you take your IBDA data range every end of the month, and you also need to ensure that you are removing Sunday, because there are certain brokers that has Sundays, Sunday candles. So you don't need to count with the Sunday candle. And then every end of the month you start counting the last 20 days, the last previous 40 days, and the last 60 days. So when you identify these ranges, the IBDA data ranges, the next thing you do is actually you take your daily range from the last 60 days low to the last 20 days high, or from the last 60 days high to the last 20 days low. And taking our Fibonacci from this swing low, this swing point that was created to this actual swing high that came exactly, I think, around the last 40 or 20 days, around that area. So this is our daily range, right? And what do we see looking at this particular price action from our last 60 days to this very particular moment? We can see that the market has been buying. We are in a bullish market. So now, having understand that, the next thing you do is I'm going to remove all these before I remove this, because you don't need to keep all these annotations on your chart. It will look noisy. The most important thing you do is you actually identify the sell side liquidity, the highs and lows of both the last 20 days and the last 40 and the last 60. So this is our 20 days low, 20 days low, right? Right over here is our 20 days low, and this is our 40 days low, last 40 days low, right? So I'm gonna write last 40 days low, low, and this is our last 60 days high. It is way too far, so I don't need to annotate that. And we can see Friday December 2023 is actually where our last 20 days ends. So this high is pumped, it came inside our last 20 days high. So I'm going to identify 20 days high. When I identify this, we can already see that the last actual 40 days high has been forged, right? And then now the next thing I do is I'm going to remove the Fibonacci retracement. I'm sorry, let me remove the Fibonacci retracement and then bring back the last 20 days high. Okay, the last 20 days high. So as I said earlier, I'm not here to teach IBDA data range. I'm here to analyze the market. But to do so, I need to understand what the IBDA data range are. That will help me easily select the next draw on liquidity. And this is one of the most crucial things. This is one of the reasons why it is very essential to know and understand how the IBDA data range is. So now we already understand that we are currently inside a premium range. As per taking our IBDA data range, we can see that price is currently trading inside this premium range, right? So based on what we saw here, obviously I can say this last 20 days low is the most obvious, actually sell side liquidity is the most obvious draw on liquidity I can see on the chart. So with that being said, we can see here we have a fair value gap that got rejected perfectly, and then we can see this large BC buy side imbalance, but we don't care anymore, because as I said, The last 20 days low is the obvious draw on liquidity. So, and as I mentioned, if that data range just help you select the obvious draw on liquidity, then after this, you go and check what is the commitment of traders report saying, what is the seasonal tendency saying for actually that specific asset pair you are trading with. So now let's check what is the COT is saying, because we need to have a strong bias, and for us to have that strong bias, it is very essential to actually uh, uh, get the data from the COT report and the seasonal tendency. That is what is going to make us have that complete and the solid bias we are looking for. Just technically, we cannot penalize that the market is coming to take this sell side liquidity. We need to ensure that the COT report and the seasonal tendency are still actually suggesting the same thing before we come to the conclusion of our opinion right here. So now let's go and check the COT report and the seasonal tendency. Guys, before we proceed, I'm going to introduce you this amazing platform, passball.com. This platform is just amazing because it has all you need as a trader to be doing good. It has all the necessary tools to help you in this trading career. So now let's go into this platform and see the amazing tools it offers. First of all, this platform offers economic calendar. As you can see, it gives you an accurate as well as up-to-date calendar on every country, on every pair you trade. So you like this calendar absolutely. Unlike other platforms, you can see these platforms has actually as we know, the last. So, ladies and gentlemen, I'm glad to introduce you this amazing platform, fastball.com. Fastball.com is an amazing platform that contains all the tools that will help you as a forex trader. As you can see, when you come to the website, you can see there are a lot of tools, there are a lot of informations that are freemium, but Fastball offers it to you for free. Now you can see it has economic calendar, and the economic calendar is very, very amazing. As you can see, when you enter the economic calendar section, you have last week, and you have the current dates, and the actual dates, and the days and the months, as well as the time. And then you can customize it when you click on screen. You can customize the countries, and there are a lot more additional countries that if you are interested in getting their own data, their economic data, you will actually get, unlike other platforms that do not offer such many countries. Over here, you can see almost every country's data is available. So this is just amazing. And trust me, this passball.com is completely free, as you can see. And here are the news. You can access every news. You can be up to date with the news from passball.com. And it also has columns analysis. You can also get access to analysis, market analysis, or I say pre-market analysis. There are columns. You can read every columns, every topic, every ongoing topic, all for free, and latest topics all for free. And here is the analysis. As I said, the analysis are also free of charge. You can see the analysis right here. You can access every analysis from professional and more seasonal traders. And then there are also AI signals on this platform. You can also download the app for these AI signals. You can see the signals. Here is a gold signals, here is a GBP signals, and you can see the total of signals and the rankings being shared on this actually section of this amazing platform. There are also data If you are interested in getting your hands-on data for free, this platform passball.com offers just that. And there are also videos that will help you, video resources and materials that will help you in this forex journey. As you can see here, we have forex option trading strategies, and this is free, completely free. So this platform is absolutely amazing platform. All you have to do is register with this platform. When you sign off, and then every day as a trader, when you want to check the economic calendar, you come to passball.com. When you are looking for economic data, when you are looking for analysis or columns or news, you come to this amazing platform. It is all in, it contains all you need, and absolutely this platform is going to help you a lot in your forex journey. Don't forget, the website is passball.com. Fastball.com is your website, is your helper, is your company in this forex industry. Don't forget to use this app and suggest it to your friends. Like this video and comment. See you next time. Here we are inside bar chart, where we are going to see what are the uh, numbers for our commitment of traders report for this particular week. And then this is gold. We are not here to look at the technical chart. We are just here to collect the data and see what the commercials and non-commercials are doing. We can see clearly that the non-commercials are on short position on gold this week with minus 23.5478. And then we can see also the commercials are on long position with 27.649. And this is a kind of conflicting bias between what we saw technically on gold and what we saw right here on commitment of traders support. But mark you, the bias we have, the expectations we have for gold coming to take that 20 days low is a short-term and long-term bias. While the commitment of traders report we saw here can also be conflicting, because we should have see actually a non-commercials having a short position, but we cannot jump into conclusion just now. We are actually going to go back and then check what they are actually doing on silver, because we know silver is correlated with actually correlated with gold. So if we see that they are having a short position on silver, and that can also be a confluence that definitely the buy we saw for non-commercials on gold is not actually sustainable. So now let's check silver first before we jump into conclusion. And mark you, we also have seasonal tendency as the third confluence while trying to draw our actual bias. So now let's check what they are actually doing on silver. A moment, please. So now we are going to see what they are actually doing on silver. Well, on silver too, we saw that they are having a bullish bias. So now we are going to check technically again. We saw commitment of traders show us that they are on long position on gold. This long position can be short term, absolutely, because those sell side liquidity we have are actually very tempting, and they are the most obvious liquidity we saw on gold. And yeah, I can be wrong, as just as every trader can be wrong, but for me, I held a strong opinion on that sell side liquidity. But I cannot say that is what I am forcing myself to see the market do. If the market is not willing to go and take those sell side liquidity, then that is fine. So now we are going to check the commitment of traders report, I mean the seasonal tendency for gold, before we jump into conclusion on our bias. So let's go and check. Okay, now this is the seasonal tendency for gold. I fill up the chart here, and we can see this is the latest data on gold for seasonal tendency. We can see this is January, and we are now in January, and we can see that in January, gold traditionally have this massive drop, and then it ended the month with a kind of consolidation. Comparing to February, we can see February, there is a lot of volatility, and it is more volatile than January. Yeah, we can see clearly. But what we need to understand here is we can see just as the first week of January, there is this massive drop, which is absolutely correct. And then there is this a kind of consolidation, and at the last week of January there is a buy, and then the week ended off in kind of well, we can say seek and destroy, or kind of there is no clear direction actually, or like when we compare to let's say April and July, we can see it has clean and clear direction, and there is a lot of volatility. So for gold, as I said, for me, I saw this last 20 days as the obvious draw on liquidity. But right here, we are seeing different things. The seasonal tendency is telling us that gold might likely buy and ended the month on buys. And then we saw commitment of traders report on gold, indicating that the non-commercial are interested in buying. And we also saw that of silver, they are also interested in buying. That means I don't have to be rigid with my bias. I have to be flexible. What I saw the market doing, what I saw the big voice, what I saw the big voice interested in doing is what I will actually and be doing, if in as much as I want to remain profitable. So this is my opinion. This is my strong opinion, expecting gold to come and take this low. But seeing the macro is telling me actually they are not interested in selling just yet. So actually, with that being said, and with these confluences I gathered, I can say we can expect this buy side liquidity to actually perhaps hold price, and we can expect to see gold doing something like this, perhaps something like this, and then approaching towards her. And it is very possible again to see gold, even if they will come to take that last 20 days high, to see gold taking the last 20 days low and then going to take that last 20 days high. For now, actually, when you follow closely, my initial bias was sell, was bearish, and then now I switch bias because I am trying to ensure that my bias is in line with what the big voice, the hedge funds, the big boys are actually having. So I'm expecting a buy, but obviously deep down, I am kind of having this conflicting bias of bearish and bullish. So in this case scenario, this is what ICT preaches, right? When the bias is unclear for you, right? Or when you are not comfortable with what you read as your bias, it's better to stay sidelines from the market in that particular period until you see clarity, right? So discretionary, when we are looking for this, when like personally, I will be staying sidelines this week on gold until I see a clean and clear direction which I can trust even more. But this is what I gathered, and as I said, the commercials and the non-commercials and the seasonal tendency is telling us that gold is still bullish, and this buy side imbalance can still hold price. We can see gold coming to take this last 20 days high. So that is that about gold for today. See you next week. I'll try as much as possible to be bringing this weekly analysis for you guys. If you enjoyed this video, please like and subscribe.